Hello everybody, it's Nick McDonald speaking from Trade with Precision. Thank you for watching this week's ICE market commentary on the dollar index and currency markets. Looking here at the daily chart for the dollar index first of all. And if we go back to where we were last week, so last week we'd started to become more of a range-bound market. I've been bearish in weeks before. We're starting to get a little bit bullish, only very, very slightly. And what I was looking for was a break, because we were in a period here with no clear trend. We made higher highs and lower lows. What I was looking for here is if we confirm this higher low here in this candle. This is going back last week. Remember the week before last week's commentary. We had this bullish candle at 80, and if we could have broken up through this high, we would have confirmed a higher low than the previous, as well as breaking up through here to a higher high. Would have just been that little bit more indication that yes, there was some bullish momentum here. Now let's look at what actually did happen. If we go through the week, what actually did happen, we did break out through the high of that candle at 80. We tried to go higher, we failed. We actually made a lower high here than this previous high, so this was lower than the previous one, and then we broke down through this low. So actually, if anything, we've just gone back to being bearish again. So in the daily chart, we've got a very slight downtrend there, but when I say very slight, it's because it's only in this last little period here. Over the longer term here, we're still putting in higher lows. If we come and look at this on a weekly chart, you just see here we still have this real indecision here where we're making higher lows as well as making lower highs. That is the definition of no clear trend. There's no clear direction on the Russell right now, so it's very, very slightly leaning towards some bearish bias based on the daily chart. Based on the weekly chart, there's no real bias. If anything, maybe bullish, but only if it could break up through these highs. Otherwise, there's not really much to read from the weekly chart as it stands. But coming to the monthly chart, looking at that bigger, longer term view, this still remains bearish as it has for quite some time. Bearish candle here, bearish candle here. Any breaks down through these candles is really starting to look like we'll continue down towards 74. So longer term remains bearish. Weekly chart very indecisive, and then the daily chart just slightly to the bearish side, but we need to see some more breakdown. I will continue to trade the bounces off the key levels. We had that this week. Remember last week I said look for bounces off key levels. Look what happened here after we came up. We broke down, we pulled back, pulled right into 80, hit it on the nose, and then fell off again. That's the kind of trading opportunity I'm taking in these range bound markets, just looking for trades around 79, around 80, and around 81. And there's been opportunities, last week, and there'll be opportunities again at those levels, more than likely this week. Just coming and looking at a couple of these spot currencies to follow up on. Euro dollar, I was saying, could back up the move on an up move on the dollar index if it broke down through this level. And actually it's held that level again really nicely. So 1.3 is just really strong support now. So any breakdown through that would be very bearish for euro dollar, very bullish for the dollar index. But as it happens now, we've moved further away from that level, so there's less threat of it breaking down. Euro dollar, I wouldn't say it's looking bullish, but certainly looking less bearish. And if it, we just need to watch 1.3. If it did break 1.3, it would be very bearish, and the dollar index would almost certainly rally as euro dollar declined down through there if it did. One reason I don't think euro dollar necessarily will, or certainly doesn't look as likely as it did last week, to break down, is if we come and look at the British pound versus the US dollar, we see that that's actually breaking up. So it was in a similar type pattern, not identical, but similar-ish type chart to euro dollar, whereas here it's now actually breaking up to new highs, and it had quite a lot of resistance at 1.6, and it's broken up through that, closed the week above it. It's looking quite bullish there, which is bearish obviously for the US dollar. Last one is dollar yen, which does still just hold out that any bulls on the US dollar that are looking for a little shit of hope. Well, here it is on dollar yen, and we do have a nice run up that we had, which was really keeping the dollar index strong. Nice pullback, and now we're back in the buy zone. We do have a bullish candle, so break up through last week's high, so up through around about 81.80. A break up through there would be looking quite bullish for dollar yen, therefore should give the dollar index a little bit of a push to the upside if that happened. But the others are certainly looking the opposite, and this is more to do with the Japanese yen than it is to do with the US dollar. So coming back and just looking at the dollar index, of course the Japanese yen will have an influence over it, but not as big an influence as something like euro dollar would, and euro dollar is looking like going up, therefore probably going to keep on pushing dollar index to the downside. So I remain bearish here, or I'm back to being bearish again after being slightly bullish or showing some indications of bullishness. Back to being bearish on the daily chart, slightly bearish on the monthly chart, longer term, very bearish in the longer term. Weekly chart gives us indecision, which makes it just that little bit unclear as to where we go next. For that reason, I will continue to trade bounces off support and resistance, trade around support and resistance. This week, I think if we come down and test 79, we'll probably bounce off it. My preferred trade and the ultimate trade really this week will be a break off 79 and a pull back into it, much like we saw here at 80. Break below 80, pull back into 80, break down, So that kind of thing, break below 79, pull back into 79, break down, I'll be looking for a run to 78. Obviously, I haven't got a crystal ball to say whether we'll break 79 and that kind of setup will occur. I'm just letting you know it's the kind of setup I prefer this week, but otherwise I will be looking for opportunities even to the long side around 79 if they set up, if we get a good bounce down there off that support level. You can see just how many times, how good the bounces have been in the past. Just look back at the last few times we tested 79 from above, came down, big rally, came down, big rally, came down again, big rally, came down, dipped below it quite a bit this time, big rally, and down, big rally again. So it's rallied a lot off 79 in the past. We're approaching 79 now, and looking, technical analysis is the study of previous patterns to help us decide what is likely to happen again. We're looking at 79. We've had some really good bounces off it in the past. We've had some really good rallies when it's been tested from above, and it's the kind of thing I'd expect to happen again this week, even if it is on a slightly smaller basis than has happened in the past. I'll be looking for opportunities around there, both long and short. Hope that helps everyone. Happy trading. Speak to you next week.